welcome. This is the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Akil. Here are the headlines. Indian markets open higher ahead of F&O expiry tomorrow. All sectors barring energy trade in the green. Nifty Bank hits another record high. RBL Bank trades with gains as the stock hits a fresh 52-week high. The Tata Group, GIC and SSG Capital will invest 8,000 crores in GMR Infrastructure's airport business. The Mindtree board calls off the share buyback plan proposed before L&T's hostile takeover bid. An independent directors committee will provide their reasoned recommendations on L&T's offer. And on that note, let's take a look at the markets which are advancing in trade, showing more strength, building on the kind of strength that we've seen yesterday. Now, we have seen a little bit of a surge in open interest as well, largely towards longs. And the rollovers for the Nifty standing at around 48%, much higher, well, a tad higher actually from what we saw yesterday. Now, even as the Nifty holds on to 11,500, the real question is, can we expect it to move back below? And I'll come back to that point in just a bit. But moving on to your Nifty banking futures too, and as far as the rollovers are concerned, it's just a notch higher at around 37% from yesterday. So we'll be watching out for some of these aspects as well. Do remember that the April open interest is gathering steam, and the index itself, which is now about 30,000, trading at a new lifetime high, continuing to advance, especially on the back of a whole host of your private sector banks. So it certainly is turning out to be a very interesting trade for a lot of these banks. But moving on to your levels based on open interest, and this is where there's been all sorts of questions of whether or not we will see the Nifty close above or below the 11,500 mark before expiry. The reason why I'm going to address this is because the significant open interest accumulation around the 11,500 call. Sure, we do have enough accumulation around the 11,600 call as well, but it is essentially the fact that the Nifty is around this mark, that is the 11,500 mark, and we are also seeing, largely max OI around there. Of course, given the fact that the Nifty is advancing to a certain extent, we're also starting to see a little more writing around the 11,500 put and a little more writing around the 11,600 call. Needless to say, the probability of the Nifty closing above 11,600 is very low, but there is a very high chance that we are likely to see the Nifty close either just shy of the 11,500 or, a higher chance of closing below 11,600 before expiry tomorrow. Moving on to stocks, let's take a look at all those stocks which are seeing a substantial increase in open interest. Let's bring that list up. We don't have too much considering it is expiry, so Torrent Pharma only stands out there. But in terms of unwinding, this is where we're starting to see rollovers pick up. So Ambuja Cement, Grasse, Magenta Pharma, GSFC, all of them are looking at substantial moves and changes in open interest there. So we'll be watching out for these. But, moving on, let's also take a look at the stocks that we intend to address on the show today. So we have ICICI Prudential, which is looking at a very, very sharp move. Strides Shasun is the other one which is in focus. It's not always as active, but today it has taken up mantle. Yes Bank moving in tandem with the gains in the banking index that we have seen as well. Vodafone Idea on the losing end, and is there more weakness in store? That's the question we pose with our experts. And Mahanagar Gas, we've seen a bunch of recommendations of late coming in the city gas distribution companies, and Mahanagar Gas, along with of course IGL, has been in contention of late as far as analysts are concerned. And on that note, we will get in our experts. But before I do that, here's a reminder: if you have any queries regarding futures and options, you can call us on 022-454-04141 or write to us on Twitter or Facebook with the AskBQ hashtag. Let's welcome our F&O experts for the day. We have Ruchit Jain of Angel Broking and Rahul Shah of Motilal Oswal Securities joining us on the show now. Good morning to both of you, and thank you so much for joining in. Ruchit, let me begin with you. Your view on the benchmarks now and how you expect them to proceed.
A very good morning, Agam. We have seen in this March series, right from the start of the series, there were a good amount of long formations which were built up in Nifty as well as the Bank Nifty futures. During last week on Friday as well as this week's Monday trading session, some correction was there, but that was just a correction within this short-term uptrend. We had not seen any formation of any kind of short positions. Now if you see yesterday's trading session post the morning first hour of the trade, fresh again there was fresh long formation seen in the Nifty as well as the Bank Nifty futures. On the options front, 11,400 as well as 11,500 put witnessed fresh writing, and unwinding was seen yesterday in 11,600 call options. So these are all indications that this uptrend which we have seen in this month of March, that is now getting continued after a small correction. Secondly, even if you see rollover figures, last two series, the rollovers on the Nifty were on the lower side. February as well as January series, the rollover were quite low than its 3-month averages. But this time, yesterday's rollover itself stands around 47%, which is higher than the average. So we believe that these are the long positions which are getting rolled into. And even from an expiry perspective, if 11,400 and 11,500 puts are attracting fresh short formations, so this is an indication that we may head higher towards 11,600 by tomorrow's expiry. So at current levels, we are advising to trade with a positive bias. 11,500 call option can be bought around 58.60 with stop loss below 27 for tomorrow, expecting target around 110.
Okay, so, well, that's Ruchit, and he is fairly constructive on the Nifty right now, which is why he's recommending buying the 11,500 call. But Rahul, good morning to you as well. How are you seeing trade pan out, but for the benchmarks, and what would you do with derivatives now?
Good morning. I think obviously the markets are in the first gear of the bulls, and what we have seen at this point of time. So I think all the heavyweights are firing in a new territory in trading zones. So I think Nifty definitely looks for a near-term new high. What I feel is, I think the levels what I am looking at is around 11,580 or odd levels on a Nifty perspective. So in the next 3 to 4 days. So my sense is I will be buying 11,600 call for 4th April series, which is available at 82.83 with a target of 110 or so.
Okay, so, well, both our experts are buying calls at different strike prices and different expiries too. But that, of course, is your main contention when it comes to your benchmark indices. But, if actually, Rahul, if I could come back to you on the Nifty Bank, because that is also clearly just trending at life highs. How would you trade this one? Would you go ahead and buy futures at this point in time, or would you stick to buying options even in this case?
I would still continue to buy options and stick to it, as we are trading at an all-time high and the markets are very volatile, and we saw in last couple of sessions falling and then again bouncing back very smartly. So I think the best way to play is through options. And if I look at the Bank Nifty, which is at lifetime high, the way the BankX has performed, I feel that there's still more room for a BankX to go to around 30,500 or odd levels, and then we can see some resistance at that point of time. So again, I would buy 30,500 call again for the 4th April series, which is at 225, 226 level. Keep a stop loss of 200 and target of 300.
Okay, well, let's talk about stocks then. And Ruchit, I'll come back to you. What stocks are you recommending us today?
Couple of names to go on the long side. First is a buy call in ACC. We have seen good amount of long positions getting formed in most of the cement stock in March series, and these longs are now getting rolled too. ACC, you can see that the stock has resumed its uptrend on a shorter time frame degree. So we expect this momentum to get continued in the April series as well. So, and one can go long on ACC April futures with stop below 1560, expecting target around 1720. And my second pick is a buy call in Shriram Transport Finance. This specifically last 2-3 trading sessions, the prices were consolidating in a narrow range. Now today you can see a spurt in the volumes on the cash chart. Yesterday's entire day's trading volume has already been surpassed in the first hour of the trading. And even if you see the open interest data of this series, that is for tomorrow's session, the open interest is suggesting an increase, which is indicating formation of fresh long positions for next 1 or 2 trading sessions also. So one can go long on Shriram Transport Finance. Agam, I would just put a caveat over here that in last 10-15 minutes post I have mailed this call, the stock has already ran up by 20-25 rupees. So I would suggest to buy on minor dips around 1225, 1230 range. If you get this dip in intraday, go long with stop below 1195, expecting target around 1295 by tomorrow.
Okay, fair enough. Well, these are Ruchit's calls, but Rahul, what about you? What stocks are you betting on today?
I think my top idea is Sun Pharma. I think we've seen this stock consolidating from 460 to 475 levels, and I think now my sense is that it is ready for a breakout, and we've seen a good decent longs built up in the stock. So my view is I think risk to reward could be very favorable in Sun Pharma. So keep a stop loss of 468 and for target of 490.
All right, guys. Well, on that note, let's discuss some stocks that we want to address in our show today. And I'm going to start off with Yes Bank. Now, we have seen the Bank Nifty rally to a significant extent. But what we've also seen is Yes Bank advance gradually from the levels of around 150 back in February to as much as 260 now. So we certainly are seeing, well, a lot of spot out here. And, well, there's some longs building into the system as well at this point in time. What may also be very surprising or perhaps interesting is that it is now testing its 200 daily moving average. The last time we saw Yes Bank trade above that level was back in September of 2018. So it's after many, many months that it is once again looking to trade above that level. But I will come back to Yes Bank. I believe we have a stock to address at hand, and that is GMR Infra. So, well, on that note, if we can actually have, we have three marquee investors, including Tata Group, GIC, and SSG Capital, which will invest 8,000 crores to buy stake in a GMR airport business, and while 1,000 crores will be pumped into the airport arm, the remaining amount will be spent to acquire stake held by the GMR subsidiaries. Let's discuss this in greater detail with Saurabh Chawla as well as Sushil Modi of GMR Group. Joining us in this conversation is also our markets editor Neeraj Shah. Neeraj, it's over to you.
Okay, thanks Agam for that. Chairman, good having you. Thanks so much for joining in. And Saurabh, good seeing you. I was wondering where you were headed post DLF. Now I know. So good seeing you here. Let's start off with this conversation around what this deal means, because as I understand, 8,000 crores in the airport vertical and GMR Infra Limited. Or before posing any questions of my own, why don't I ask you to explain this deal to us and what it means for the listed GMR Infra?
So primarily what we have created is a platform play with some marquee investors, namely, of course, GIC and Tata's and SSG. And in creation of that marquee platform play, we have also succeeded in deleveraging the balance sheet, the standalone balance sheet of GMR Infra and the standalone balance sheet of the GMR airports. So it's a win-win game. It's again a game changer in the infra space, where going forward we will have the benefit of expertise, financial structuring, capital available from these investors, and combined with the development skill sets and management skill sets of GMR, we'll be able to really play into the growth opportunities that India offers. Why India? Actually, globally, there are other parts of the world where aviation is growing at a double-digit pace. So the whole idea is to exploit that and participate in that growth story. So two simple takeaways: one, creation of a platform play with global majors, and two is to deleverage the GMR balance sheet.
Okay. Sushil, you want to add something to this as well? And I would want to talk a little bit about the non-airports business first, because then I'll have a slightly lengthy conversation about the airports business.
No, as Saurabh rightly articulated, so this effectively, if you see, it has become an unformidable platform. So it was an unparalleled platform already created, being the leader in the country in this space. And even globally, if you see, we are the fourth largest airport infrastructure player in the private space. So and as we move along, perhaps we are only going to go up in terms of even so-called ranking globally. So and with these kind of murky names that gets attached to your business, that that itself endorses and establishes the fact that we are the leader and we carry the capability to take this business to the next orbit. We already have grown phenomenal, and we are going to go to the next orbit of growth as the time goes by.
Okay, I'm going to talk about this a bit, but sort of you alluded to how this is a win-win for deleveraging of the GMR Infra balance sheet as well. Your Q3 release, if I'm not wrong, says that there is a net debt of 20,000 crores that sits on the books of GMR Infra, the listed entity, which has about 6,800 crores of debt due to the airports vertical. Can you elaborate a bit on what would happen to that numbers or those numbers as a result of this deal alone?
So the consolidated debt of 20,000 crores obviously will come off by about 8,000 odd crores. So that's a straight math. So the consolidated debt that will remain is about 12,000 crores. But yes, on the airport side of it, it's the 6,000 odd crores which is there on the standalone airport business. That will also come off to a minuscule number. So that's the deleveraging story that we bring to the table with this divestment of equity in favor of these marquee investors.
The minuscule number would be a combination of the 1,000 crores as well as the earnouts of about 4,400 crores. That's how you're reaching to a minuscule number? If you can just elaborate a bit on that math.
No, go ahead.
So let me just explain you.
Sure.
So the 20,000 odd crore is the consolidated debt, as you rightly said, basis our quarterly results of December. So of this 20,000 crore, 6,500 odd crores was the corporate debt sitting at GMR Infrastructure Limited, which is a holding company. So effectively what this transaction is bringing onto the table is 7,000 odd crore of secondary proceeds, which comes straight to the GMR Infrastructure. So thereby meaning what Saurav indicated, this 6,500 odd crore of a corporate debt becomes minuscule. So, and which is what effectively is something that we want, what we call the leverage. Because other than that, whatever is there, which is, let's say, 14,000 crore erstwhile, and now let's call it ballpark 12,000 crore after this 8,000 crore gets utilized, then those all are against various projects which are having substantial cash flows as well as the ongoing accruals year on year. So those all are on its own feet. We have addressed in one shot all the big let's call it elephant of corporate debt, which was an apprehension and putting us into a category of being the leverage company. So no more leverage. What we talk from here onwards is growth. How fast, how much.
No, and I like the optimism as well, but gentlemen, just one question on the GMR Infra, which will now be devoid of, devoid is a wrong term maybe, but separated from the airports business, right? That's an intention that you stated, that you will demerge the airport business. The GMR Infra company will have all the other businesses. What happens to the deleveraging and the operations at that business before we come to the airports business, because that'll be a slightly lengthy conversation? What happens there? 12,000 crores or 13,000 crores of net debt still exists there, and the businesses for the space at large haven't really come out of the woods as yet, not just for you. How does that picture look like?
No, so let's understand our overall debt number. The 20,000 crore that we just spoke, of which, as I said, 6,500 odd crore was the corporate debt, right? The another 6,000 odd crore, or part of it, or rather 7,000 crore, is the airport debt. So once you take out the airport debt and the corporate debt, then what is left over is basically another 5 or 6,000 odd crores, and which is again more primarily against our various road assets. And the road assets, as you know, is all annuity and some bit of a BOT project. So that those have their own revenues and own earnings to service those debt. And similarly, we have some debt around our energy vertical in terms of the coal mines. So those all again has a significant earnings. Our coal mine itself at the mine level last calendar year had an EBITDA of somewhere around $170 million, and in that we own 30%. So net henceforth, when we talk about airport business and all the rest of the businesses, what we are talking is the rest of the businesses having another debt of let's say around 5 to 6,000 crore, and that will have its own cash flows irrespective to service those debts on an ongoing basis.
Okay. Thanks for that clarity. I'm glad I've got it right now. Let's talk about the airports business now. You've got large investors in. You've bid for certain airports which operations will begin at some point of time. You're already owners of certain airports as well, or operational owners of certain airports too. How is that business looking, and how does that change as a result of the monies and the capital coming in as a result of this investment?
So basically the existing airports, so as you rightly said, we are having 5 airports in the country and another two overseas. So 7 airports in our portfolio. Of the 5 in India, 2 are operational and doing fantastic, which is Delhi and Hyderabad. The another 3 in the pipeline, where one Goa is already, construction has already begun, and Nagpur and Vizag to commence soon. So net, these businesses effectively, if you see Delhi and Hyderabad, those all are on their own feet. In fact, Delhi is going for expansion from 66 million passenger capacity to 92 million passenger, and similar, so is the Hyderabad, which is 12 million passenger capacity today, going to around 30 million passenger capacity. And that's simply because the fact that these airports are growing, high double digit. So with those growth, we need to expand and expand fast. So for all these expansion, the company has huge cash sitting with them, those airports itself, and then they will continue to have their earnings year on year, because this expansion takes anywhere between 3 to 4 years. So henceforth, these airports are their own feet. They will be able to meet all their financing requirement basis existing cash, plus the internal accruals that comes, and as well as some of these chunkier monetization that we do around the commercial real estate that is attached to all these airports individually. So now coming to in terms of the various growth. Yes, so as you know, the Delhi and Hyderabad has already started declaring dividend last year, while Delhi may take a pause for next 2-3 years considering the big expansion, but Hyderabad will continue to give dividend. So these dividend cash flows, depending upon the timing and the size of the new opportunities that comes to us, and obviously we all know that those opportunities are huge, and that's how our investors also are looking at this space and wanting to grow using GMR as a platform. So depending upon that, we continue to believe that we will have the significant cash flows out of these dividend cash flows, or the multiple levers of, let's say, in any of the airport we own anywhere from 60 to 100%. So we can even think of, depending upon if so required, some bit of minority divestment at any of the airport. So that enables us to ensure that we don't lose any of the opportunity that comes our door.
Are you guys, and either of you, can reply to this, are you guys in active conversations for those small, relatively minority divestments in any of the airports that you own a majority stake in already?
No, we are not.
We don't even need it as of now, and we don't even think that perhaps we would need. These are only enablers. I just gave you the preamble that these are the various opportunities.
Yeah, I was just wondering if you are in active conversations any which ways. A lot of times string of pearl strategies also works wonderfully. Just one small clarity. Sorry, Saurabh, you want to make a point?
Oh, go ahead.
Okay, just one small clarity that I needed. You've mentioned.
My point was that
Please carry on.
Sorry. Go ahead. We just accosted. Okay, what I really wanted to highlight is, if you look at the quality of investors who have come at the platform level, there is no need for any capital raise at the subsidiary levels, at the operating level. And even if it is, like what Sushil highlighted, that as we grow, these opportunities will be evaluated along with our partners. And if they want to participate in something which is at the subsidiary level, they're most welcome to do that. But we don't have to go outside anywhere to seek capital. This is now a play where we will determine the merits of an investment and seek investments in that growth. So I think that's the limited point I wanted to highlight there.
Can I request you to elaborate a bit on that? And the reason I do that is because when I speak to a lot of investors who watch the growth of infra companies, some of the other, one of your peers as well, and all of them have to say that in the next 10 years, you will actually view GMR as an airport player. Yes, the other businesses are there and they may thrive and they may do well, but it'll largely be an airport operation dominated business which these companies could be known for. Would that be a game plan of sorts, even if it's in the initial stages?
Yes, that could be. We are searching for growth, and airports is at this stage offering that growth. So there is no reason why we will not be a large airport player, both domestically and internationally. Like Sushil pointed out, we are the 4th largest in the private space. So for us, we will go wherever the growth is.
No, you're absolutely right. Actually, if you see that we are in a space, airport infrastructure is a space which in itself is offering a humongous opportunity to grow, and that's where our expertise is, and that's where we have, if you may use, the least of the competition. So the entry barriers are very high because this is very sensitive space. To understand this business and operate into a sensitive space like airport infrastructure, it's not that easy. So we are into a space where we can capitalize onto our expertise and the learnings that we have acquired over last decade.
Okay, last couple of questions, gentlemen. Just one clarity on these earnouts that you mentioned, up to 4,400 odd crore rupees linked to achievement of certain agreed milestones. Would you be able to tell us about these, if it's possible, one? And two, some elaboration on the deal that came about 3 days back. Somehow it escaped the minds of the market, but it seemed to be an interesting one with Bharti.
So you perhaps opted for escaping it, but nonetheless, so coming to specific to the Ruchit, because today is the day to talk about the equity investment, not the other stuff, which we can talk separately later. So in terms of this earnouts, it's basically, as we all know, that these are generally a bit standard in the transaction size of this nature. So these are linked to the certain performance metrics where there is a timing issue, that okay, the expectation is there of achieving some of these metrics in a particular time frame, and our investors has appreciated and they recognize that this is going to be achieved. But what we have agreed is let that get achieved, and these earnouts belongs to us. So the example being duty-free business, the duty-free revenue ramp up, how fast do we achieve? So is the commercial real estate. How fast and what size do we achieve? And good to note here is what you just said, that some of you escaped it, but one of the significant element of this earnout, in a way, we have achieved pretty recently by doing the monetization what we did.
Okay, Jaman, I'm guessing that we've spoken at length about the growth business, growth in the airport vertical, so wouldn't want to dwell too much on it, except for congratulating you on this deal. Good one, and all the best with any other deals that you do or the expansion plans that you have for your airports business. Thanks so much for speaking to Bloomberg Quint today.
Thank you so much. Thank you.
Well, Agam, good deal. I mean, maybe the market already priced that in because the stock had a merry run in trade yesterday. Yeah. But the interesting bit, and something that I had missed, was the debt in the standalone business that comes out quite dramatically from the 20-odd thousand crores that they had to about 5 or 6,000 odd crores, which would, just from the looks of it, seem a lot more manageable than the Herculean number that existed before. So interesting deal, both for the non-airports business as well as for the airports vertical.
Absolutely. Well, and Neeraj, and the stock talks for it, because we are actually seeing a very sharp surge over the previous 2 or 3 days, and on heavy volumes too, and also making a dash well above its crucial daily moving averages. But Neeraj, thank you for taking us through that conversation. And with that, we shift our focus back to our F&O show. And well, I was addressing Yes Bank, and with respect to Yes Bank, it is now trying to test its 200 daily moving average, currently up as much as 4% at around 263. What's going on with this one, and what would you do with this? And I believe I still have our experts here with us. So Amit, let me take up Yes Bank with you. Thanks for being patient with us. Pardon me. Okay, so I have Rahul here with us. Rahul, let me take up Yes Bank with you. Well, Yes Bank is at around 264. What would you do with this one, and would you initiate longs even at these levels, or do you think that the risk-reward ratio is not that skewed at this point?
I think Yes Bank, obviously we had a smart rally in the stock from the lower levels, and if you look at in the last 2-3 days, good longs built up as well, and today's session also with a good fair bit of volume, the stock has moved up. So I think it is out of the range of 256, 257 band. Couple of time it took a resistance over there and it has cooled off. So my sense is that now it has come into a new trajectory, so I would definitely go long at this level also. My target is I think around 280 from the current levels, and near term stop loss again could be 250, 850.
Okay, well, so that's as far as Yes Bank is concerned. And the other stock that we wanted to address in today's day of trade was Mahanagar Gas. The thing with Mahanagar Gas is that we've been talking about that of late, and there's been a lot of well, should I say, recommendations coming from our analysts in general. Let's pull up how Mahanagar Gas has done over the previous few days, perhaps even the last 1 month. It's advanced by around 10.5%. A gradual up move from the levels of around 880, pardon me, to around as much as 1,001 for now. Ruchit, your view on Mahanagar Gas, how would you place your bets here?
So the stock has recently formed this high top, high bottom structure, and we have seen that in last 1 month, the up move has been supported by increasing volumes. So I think this up move is likely to continue towards 1,030, 1,040 kind of range in short term. The risk reward ratio, but for creating fresh longs is not favorable, because on the upside we are looking at about 3%, 3 to 4% further up moves from here, and the stock has already gained 10% in last 1.5 months. So I think if existing long positions are there, they should continue to ride the trend, but fresh long should be avoided.
All right, guys. Well, we're out of time on this truncated show, but I'm going to take a moment to thank both our experts, Amit and Ruchit, for joining us and taking us through their views on the markets at this point in time. For more updates on the F&O space, don't forget to check our website, bloombergquint.com, especially the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg Quint.